Alright, let's do a quick update on what's going on in Kadena. So, at the start of this video, we're going to be checking out how Kadena is performing against the US dollar. We'll reiterate the previous price targets that we mentioned, and we'll be looking at the market structure for both the US dollar and the Bitcoin pair, and looking at where we're likely to move to next. Let's jump right into the US dollar pair. Now, as always, I just want to quickly show you, for those of you who are new, if you're already a veteran to my channel and you've been watching my KDA videos, you already know my perspective on this. No matter how you draw your macro Fibonacci, you've majorly invalidated the 786. So we're clearly super bearish right now on Kadena. There's still a lot of people shilling altcoins, still a lot of people saying altcoins to the moon, altcoin season is coming, but you look at the Bitcoin dominance is heading up. This means Bitcoin is likely to outperform altcoins, so it is the complete opposite of altcoin season. What does this mean? This means that your altcoins like Kadena are probably going to keep on getting wrecked against not only the US dollar, but their Bitcoin pairs, which we will be checking out towards the end of the video. I also do just want to reiterate the amount of volume that we've got coming into these markets right now. I mean, there's a plethora of volume traded and predominantly volume sold over on Kadena. You know, the past month or so, you know, 150,000, 250,000, 280,000. You know, up here we've got, you know, 1 million, 1.15 million worth of Kadena sold in a weekly candle. So, you know, the bulls are clearly not in control of this run right now, and I think a lot of people are expecting the bottom to be in for Kadena a lot before it actually is. You know, I've been hearing people saying they're buying the dip on this all the way down, and I've been personally covering this since $6.50, and I've been saying again and again and again that the trend is your friend until the end. If we look at this, look at your EMA ribbons to the downside on the daily, and ever since we flipped below this trend line that we broke, you can see rejection from the EMA ribbons, rejection, 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 and we barely even bounced up to them the other day. We actually came up to the 13 EMA, which is the short-term moving average we are going to be running off. This is very important to note. When you are in an uptrend and a downtrend, the 13 EMA is absolutely perfect at characterizing whether you're able to have a breakout or whether the market structure is staying the same. This is also useless when we're trending sideways. So bear in mind, this is a short-term moving average. Like I said, when we're trading sideways like here, you just have it fake out, fake out, fake out all the time. But when you're in an uptrend, it holds perfectly. When you're in a downtrend, it holds perfectly as well, and this is what we've been getting into resistance for. So I know there's a lot of people that are very eager to buy the dip on this. A lot of people have been asking me, when do I personally plan on buying the dip on this? And I don't have a crystal ball. I'm gonna buy this whenever I feel like we're having a trend shift, and at this moment in time we're having the furthest thing from a trend shift. You know, in the past couple of days we've just confirmed that the trend is still bearish by getting rejected, lower high, you know, lower high, lower high, lower high, lower high, lower high, lower high every single time we come into these EMA ribbons. So it looks pretty brutal to me. What I did want to talk about is, if we hop over to the daily, this orange line here, I know there's a lot of things on the screen. I'm going to clear this up in a second. Let me hide the EMA ribbons and the moving average. Let's get rid of this. This was to show how far we've dropped since I started covering this. We're down 70%. So congratulations to all of you, because I know there's a few of you, a couple of veterans that do watch all of my KDA videos. And, you know, you do comment on a lot of my videos. So congratulations if you've been watching me throughout this period in time. And like myself, you've been sitting on the sideline, because, you know, we're able to buy for 70% cheaper than all the people who thought the bottom was here and thought the bottom was here and thought the bottom was here. And they're probably going to think the bottom is here before we come down to $1, at least in my opinion. What I would like to show you from this is the most recent micro fib we've got from the low to the high. We have capitulated below the 786. Now, you can draw this a few different ways. You can actually draw this down to the candle wick down here, and as such, you wouldn't have yet capitulated below the 786 Fibonacci. However, I feel like the trend lines were much better respected when you put this on the daily close here. So for example, if you draw this down to the wick, you can see, you know, we bounced from nothing here, and we bounced from nothing here as well. But then we revert it back, and you can see 618 fib perfectly held, perfectly held, and then a massive move once you came down, perfectly backtesting the 786. So, and then once again, like clockwork, getting rejected from the 618. So this is why I have the fib drawn like that. I think this is the best way that the market structure was respected within this Fibonacci, and we're moving down. So I've got a couple of breakdown targets. First of all, I believe this, let me just double check. Yes, this was the M pattern breakdown, and this other purple line that you see here was this asymmetrical triangle breakdown target. They're still both valid, and both of them are what I personally plan on having play out over in the market structure for KDA USD. Now, let's see how our prediction has panned out, because where was it? I think it was somewhere around about here, almost a month ago, you know, coming on for 3-4 weeks or so. I was predicting a 69% drop on KDA, and since then we've moved down about another 25%, which is great because, like I said, I've been sitting on the sideline. I hope that that you guys who've been watching my videos, guys and girls who've been watching all of my KDA videos, I hope you've also managed to, bite your nails and sit on the sideline as well, like myself, because we're getting much cheaper price targets than the people that are not willing to wait for a trend reversal, and this is great. This is what we want. So market structure is very, very clearly heading down. I think we are heading down. Like, first of all, I'll give you the least bearish price target. This is the M pattern breakdown. This would be a capitulation of over 40% from where we are now. Bear in mind, this is the conservative target. The next price target down, let's see, what have we got here? Alright, I just had to cut the video for a second to remind myself of what these targets were from back here. So basically, we've got 3 touch points down here. $1, this is not backed up by any particular technicals. This is backed up by a psychological price target. Obviously, when you're trading these markets, people are looking for big, round psychological numbers. Like, everyone was calling for 100,000 Bitcoin. No one was calling for $98,645.27. People look for these big, round numbers in which they want to make trades on. So $1, I think $1 is going to be a big area of support for KDA. But like I said, unfortunately, this is still another almost 50% drop down here. Then we have 90 cent, and this is your 3.618 fib. If I zoom out momentarily, you'll notice that we've got a big macro fib from this low to this high up here before we broke bearish from this ascending trend line. From this, you've got your 1.618 right here. 1.618 was well respected. We capitulated and chilled around this for a plethora of time. 2.618 down here as well. Very key area that we got rejected from multiple times. That was respected. 3.618, like I said, at 90 cent. I do also think this is going to be a big area that the price is likely to magnetize to and be attracted to. So the next and final level down is a huge 1.618 Fibonacci from all the way up here, from this low $4.50 all the way up to $10.30. This was one big macro move, and we're not even going to see how this is going to plan out until we come down to like this 80 cent. Like I said, at the 1.618, I actually have this trend line backing back a bit further though, because this 1.618 also conveniently lines up with a plethora of touch points that we've got here, and all over here. There's weeks worth of data traded on here. So we've literally got, on this part alone, we've got almost 3 weeks worth of data traded. So this zone down here, this big green zone, in my opinion, this is where we should be looking at KDA to go down to next. So like I've been saying the past couple of videos, $1, 90 cent, and 80 cent, these are my price targets for KDA. Now, let's check out the Bitcoin pair. I want to make this one very quick because I know that most people are interested in the USD pair, but I do want everyone to be certain. I do want everyone who watches my videos to recognize that the Bitcoin dominance is currently moving up. And if you're unfamiliar with the Bitcoin dominance, you might be wondering, how the hell does the Bitcoin dominance have anything to do with KDA? Well, the fact of the matter is, when the Bitcoin dominance moves up, it simply means that Bitcoin takes up a larger percentage of the total crypto market cap. Another way of saying that is Bitcoin is outperforming altcoins. So it doesn't matter whether the price of Bitcoin or altcoins are going up or down. It only matters about the percent of the market cap that Bitcoin takes up. While that percent is going up, you can imagine if the Bitcoin dominance goes to 100%, then altcoins go to 0. If the Bitcoin dominance goes to 0, then Bitcoin goes to 0 and altcoins go exponentially up. that is basically the gist of things. So while you're seeing the Bitcoin dominance go up, altcoins are going to get wrecked. I don't know how so many moon boys are still being bullish on altcoins when it's so black and white that the Bitcoin dominance is breaking out. You look at any Bitcoin pair, like apart from BNB, which has been holding up very, very nicely, every other altcoin pair is breaking down. Now, before you wonder where on earth have I got this drawn to up here, if we come over to the daily time frame, I've discounted the wicks up from here because they were very, very euphoric on the wicks. I mean, these were, you know, over a 10% move or so just on a wick on a daily candle. So I think this much better defines the market, and to be honest, we've very well respected the 618 and the 786. So, you know, I'm always looking at different ways you can draw these fibs depending on, you know, how the market reacts, and it just seems to me that, you know, drawing it this way, market structure was much more respective of the Fibonacci. So keeping things nice and sweet, zooming out, we're clearly, I don't even need to do TA on this. I mean, you can see we're basically in a straight line sideways down on how KDA is performing against Bitcoin. And I think this is going to continue to keep on moving on. This is a reference to KDA USD, but the market cap of Kadena is literally 360 million. Now, in my opinion, this is still quite high. I do think that this can go down a lot more. But with that being said, on the Bitcoin chart, we are currently capitulating, or we look like we're about to capitulate rather, below the 786 fib. We've got a red, green, red technical structure over on the market right now, and this never plans out good. For example, I don't want to go through like 1,000,001 data points. We've got a red, green, red here, breakdown. Red, green, red, breakdown. Red, green, red, breakdown. Let's try and find another one. Red, green, red, huge breakdown. Red, green, red, once again, huge breakdown. And once again, we're putting in another red, green, red. If you want, you can go through the market structure, but pretty much all of these, almost all of these, it's not 100% guaranteed. Never any guarantees in the crypto markets, but it seems pretty black and white that we'll be moving down. From the 786, the next point of interest that I see panning out is this big trend line down here against Bitcoin, and this is a 55% drop. Wrapping up the video, the squeeze bomb is very much in favor of the bears. We recently started to reset, but as we are now getting battered against the EMA ribbons and the moving averages, and bear in mind, EMA ribbons are simply moving averages. Anyway, I probably should have just said while we're getting battered against all of the moving averages, we are very likely to move down. Red, green, red structure, looks like we want to come down. Not much volume at this moment in time, that's the only thing. Very, very flat volume, but bear in mind, this can come down a lot harder than a lot of people think. So that is my take on KDA. Like I said, I'm not a perma bear on this. At some point in time, I really do look forward to being able to buy the breakout of this. And the beauty of being a patient trader sitting on the sideline and being conservative is that I'm going to be able to buy for much cheaper than all the people that thought, you know, the bottom was in at $6.50, or the people that thought the bottom was in at $5, $3, $2, $1, you name it. I think it'd be very, very wise to sit on the sideline, wait for the trend to shift. At some point in time, KDA is going to break back bullish, and I will be the first to capitalize on that move. And the people who have been DCAing all the way down since, you know, $5, $6, $7, $10, they're going to have barely any money left to buy the dip. And, you know, most of their buys are going to be all the way up, and then they'll need to do a 3x, 4x, 5x just to break even. Whereas we're going to be getting in at the start, just like that, getting in at the start of a trend shift. We're going to have much more profitableness to the upside, if that's even a word. It's probably not. We're going to have a much higher level of profitability, that's another hard word to say, to the upside, and that's what I think we should be waiting for. So that's all I've got for KDA. I think we're moving down between the levels of $1.80 is where I think we're coming down to. That's all I've got for KDA. As always, not financial advice. Cowboy out. Peace.